Good morning, traders. Sorry about the delay this morning. A few technical issues. It's 8:05 a.m. Chicago time on Tuesday, the 3rd of May, 2022. Quick mic check, please. This is episode number 2225. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, all right, let me fix that a little bit. This morning in our pre-market summary sheet from Convergent Trading, we see that the overall market position is neutral. We are basically unchanged on the settlement from yesterday, except in Europe, a little pop higher in Europe. The main, some big numbers out of Europe this morning. Of course, we had BP, we had several others, BP, Deutsche Post, and others. We also have Marathon Petroleum out of the U.S., Pfizer, Paramount, DuPont, Biogen, Teva, and many others this morning. Weigting beating DuPont, I believe, missed by 27% on the earnings as well as the revenue figure. After the close today, we have Prudential, AIG, Starbucks, AMD, Akamai, Lyft, Airbnb, and also many others. What's top of mind for the news for risk this morning? The Reserve Bank of Australia hiked rates more than expected with quite a hawkish tone going forward. We also got hot inflation numbers out of South Korea and Europe. The China COVID situation, numbers are increasing, but appear to be stable. They appear to be stabilizing. There's clearly an effort by the Chinese government to keep things flowing. There was a statistic, actually, that I had heard yesterday that current trucking capacity is running at 20%, which is mind-blowing. 1/5 of the logistical capacities being used in China. This is really exacerbating the supply issues. Don't forget that earnings continue to be in play. There's a lot of movement as a result of earnings. And then definitely don't forget that tomorrow we have FOMC. We're expecting a 50 basis point hike. And then on Friday we have the unemployment non-farm payrolls figures out of the U.S. So there's a lot to weigh in. It's tricky with the FOMC coming in tomorrow. It's tricky to I believe for funds to initiate anything, but there's plenty of room to to hedge and to take in a more neutral position ahead of that number. So, and futures are heavily used for that. Today we have the ECB's President Lagarde speaking right now. The big number today is the JOLTS job openings. This number has reached record highs. We'll see what comes out today. The expectation for today for JOLTS is 11 million. The prior is 11.266 million. For reference, this number historically really hangs out around, if you look at the last 25 years or so, until COVID, this number hangs out at about 6,000, somewhere between 4 and 6 million jobs unfilled in the United States. And since COVID, it's been above 8 million, and now it's at its 25-year peak at 11 plus million jobs. So this is an important number to watch. It speaks of wage pressure. As these jobs aren't fulfilled, employers have to pay up to compete for candidates. We get factory orders also at 10, and then Bank of Canada's Governor Rogers, and then we have the U.S. API crude oil stock change a half hour after the equities close. Looking at commodities, crude oil, which had bounced off of the $100 mark yesterday, pushed as high as 106 or so, and has come off, currently trading at 103. Still it's higher than where it was over the weekend by $3, although it shows it's lower versus yesterday's settlement. Gold's been mainly sideways, trading between $1,800 and $2,000 all along. Silver somewhere between 21.20 to 26.27, and so on and so forth. Bitcoin and Ether are also in a holding pattern, although they're holding up pretty well so far against everything else. So that's where we stand. Looking at the S&P, the S&P is traded 201,000 contracts, which is pretty much in line with what's expected by this time of the day. The inventory is 29% long, range 47 points. The S&P has done a pretty decent job testing up and down and holding the center. Completely balanced. Currently, the point of control at 41.58, shifting up from 41.46, something like that yesterday. Let me look at where it was yesterday. 41.46, and by the time we opened, it went down to 41.32. So the value in the overnight session is being accepted higher, and I believe we did yesterday as well. We accepted the point of control higher yesterday, 41.50 or so, versus the prior day's 41.29 for the full session. So today's low is actually the point of control from Friday. And it looks like it's trying to stabilize to push higher. Just a quick review. Yesterday in the Trader Bite, I talked about the potential here for pushing through this 41.50 being a key figure. It's a kind of played an over underline. This 41.50, if it pushes through, then the trade is long on a pullback above the 50 to target 41.85, somewhere around there. The secondary scenario, which was predicated on where we were, is an attempt to push higher, and then I'm expecting it to take out the week low that was left behind yesterday at 41.1075 for a push to 40.50. 40.50 becomes the target of scenario 2. So what did it do yesterday? Real quick look so that we can make sure we understand the narrative. Here's what happened yesterday. Whoa, here's what happened yesterday. Yesterday, we opened up, we dropped right through that 41.10 right away, the week low, consolidated in the middle. Tough trade here, I would imagine. I wasn't here for it. I took the day off yesterday, but essentially took out the prior day's low, Friday's low. Friday, trend day down, point of control at the low end of the range. Should I say pop quiz? I don't know. Been quizzing you a lot lately. But we talked about this. We talked about how if the market trends and it closes at an extreme, especially if the point of control shifts. Now let's redefine things here for you. The volume point of control, the point of control is known in statistics as the mode. It is the most traded price, or the price with the highest sample of, with the highest data sample, or occurrences or events. And volume point of control is using the number of contracts traded at every price up and down. We create a volume profile, and the volume point of control is the most traded price for that session. If that volume point of control is near the lows and the market finishes near those lows, we expect continuation lower in the ensuing session. Usually in the overnight session, we expect it to go lower. Now you notice here that the low on Friday was somewhere around 41.1850, something like that. And already in the overnight session, it went to 41.10. So that's right here, 41.10. So that's already done, but The test really needs to occur during the day session to give us a true test to see if there's a continuation, there's an interest in continuing lower, or if we are likely to bounce. So we got that true test right here. We came right back into the range. We broke back through, tested from below, then we broke higher, tested from above, and then we finally get that push that was expected on scenario 1 to continue higher. And then guess what? That's not enough. We didn't pull back so that we can continue higher as expected towards 41.85. We only got to 41.65. Nope, we're going to just trade somewhere in the middle here in the opening swing and then finally break through to put in a low towards that 40.50, putting in a low yesterday at 40.56. Remember, 40.50 was the expected test on scenario 2. So what you have here is scenario 2 moving to scenario 1, continuing to scenario 1, and then back to scenario 2, and almost returning to scenario 1. Just a big old mess. But if you look at how it tested, here's your mid VWAP. Here's your RTH VWAP mid, right? Up, comes in, RTH VWAP, RTH mid, right against the prior day's low. This would have been a trade for me. Pull back to mid, look for a return, look for continuation to this level here. This failed, this was an X, this was a loss. Then you're looking for a mid test to the downside, an extension of this move down, and there it is. It occurs right there. And then you have this mid short that takes you back to the IB low. We have a neutral day. We have what's called a neutral normal day. And of course, we're targeting 40.50. But this kind of action here, this V bottom type of move, this is an excess. So if you look below this level right here, somewhere in the 60-65 range, you'll see that there's a true excess. Seeing that in real time, and if you're just being very, very agnostic and really monitoring what the price action is, seeing that in real time, and then getting the higher low triggers along back to the IB. Again, hindsight's 2020. Trading the chart in hindsight, you know, anybody can do that. I'm not trying to do that. I can't comment about how I traded it because I wasn't here. I didn't trade it. But this is a very, very distinct setup here. It doesn't occur very often. And what we have is a V bottom. You look to the right and you see that there's very little volume. If I looked at the footprint for this period, I bet you it's all pink. A lot of imbalance. And then what you look for is, does it come back and refill that thin area? If it does not refill that thin area and it puts in a higher low, that is a short squeeze waiting to happen. That is just one of the most powerful setups I have. Okay, so I'm sharing a setup here with you. I'm not going to go through the specifics. It's going to get too long. But a very decent trade here if you could catch it. Other areas you could catch it. Where? Let me quiz you. Here, we are right here. What other areas could you catch this long? Take a guess. Just think price action only. Forget about the volume profile. What other areas could you catch this long? Come on. So much structure here. So you get the V bottom. You get these higher lows. Where else can you catch it? I'll tell you where. Right here. Okay? Right there. Every time you have an impulse, again, another setup. Here's another freebie for you. Every time you get an impulse, you're looking for a continuation trade. This is a continuation trade that failed right here. That failed, came right back to the zipper, but then it started to continue. So you always focus on this impulse, and that would be the area you want to lean against. We've got a tiny little zipper, and you want to lean against that area. Another push. This is an impulse right here. I'll show you another one. There's an impulse there. And then it continues and it comes back to the high of the impulse. I know that's really hard to see, but take a look. Here's an impulse right here. This is a quick push. You want to have it go up through, pull back, go up through. If you didn't catch the breakout, then you're looking for this long right here. Okay, so this took a little bit of heat, about 2.5 points or so, and then it continues. Here's another impulse. Okay, and it pulls back, chops, blah, blah, blah. You're looking for a pullback to the top of that impulse, and so on and so forth. This is a scalpish kind of setup, but it could run for pretty decent 6R, 7R, sometimes 10R on those trades. Okay, so this is what I'm looking at. This is why I use a P and F chart or a Renko chart, which also gives us a pretty good idea of what's impulsive and what is not. Okay, so just sharing some ideas there with you. Please do not trade these without testing them yourself. There are a lot of nuances. It's not as simple as I make it look here. It never is. And I'm going to be the first to tell you that because I have nothing to sell you here. I'm going to tell you that this looks very easy, like how to identify an impulse, and there's a little bit of science, statistics, and quite a bit of intuitiveness to it. Now, we finish yesterday as a neutral normal. We open up, we squeeze through that high, fairly bullish. We take out the prior high. We also took out we pushed into the hang on. So we took out the prior high, we took out the prior overnight high. So yesterday, Sunday night's trading, we had a high, which I had to look up because I didn't trade yesterday, 41.58 and a quarter. We pushed that. This is singing a little bit bullish. This may see scenario 1 from yesterday, today. You note that the pullback shallow. You note that the profile is pretty much balanced. What do you notice immediately? On this profile? Tell me some of the things you notice here. We're running out of time. I've got 2 minutes to go. What do you notice here immediately on this profile that should give you some clues as to the kind of opening that we have coming for us? What are we noticing? So we know this profile is balanced. We put that on the summary sheet. What else do you notice? Here's what I want you to notice. The point of control right here. Point of control for the overnight session is 41.58. We are at the point of control. The VWAP and mid are on top of each other. We're on top of settlement and close. We are within range of the overnight point of control. A lot of crap going on in the same area, and on top of that, we are right in range of yesterday. So we're expecting an OAIR opening type. An open auction, meaning a two-way auction in range, which tells us that we do not have an imbalance of any kind for the market to respond or to push immediately. It could still push, but we don't have a clue early on, and we have everything stacked on top of each other. Full session mid, full session VWAP, overnight point of control, prior settlement. So we are unched on the day. All of that says that the market is in a state of complete nirvana. It's found its spot for the overnight session, and it found it on top of where we closed yesterday afternoon. And so that's where we are. Yesterday's point of control at 41.10. Which was the prior day's low, so that's beneath us. That's well beneath us here. So overall, we expect this market to be relatively choppy this morning. So it is really wise on mornings like these, I'm trying to save you money here, really wise to just not trade the first 20 minutes or so. Let the market makers on New York Stock Exchange clear the market on open orders, the imbalances that result from that, so that you're not caught in these sweeps. It takes about 20 minutes for everything, for the engine to be fully firing on all cylinders. Let the 20 minutes go by and then find your spot. This is my recommendation to you for this morning. Anyway, I'm out of time. The scenarios, you know what they are. They're pretty much the same as yesterday. Let's look at the expectations for today real quick. So here's what we've got. Expecting an open auction out of range, expecting this thing to try to revert back. I expect it to fail. I'm looking for an impulse higher to the over-under line, which is yesterday's high. Okay, to the over-under. And then I expect the overnight high to break. So I'm looking for the overnight stat to break to the high side. We're getting back into the single prints from last Friday. We're taking back a lot of the sell-off from last Friday. Once we push through, that I'm looking for a 4,200 right there. 4,200. And then your big magnets, 4,214. 4,214 is a big magnet. Here's the key magnet stock zone. This is scenario 1. 14 is the key target. 00 is the first target, but 14 is the big target, and I expect it to get it today. This is a bit of a response today. We're seeing treasuries rally this morning, putting downward pressure on yield. The secondary is a push immediately off the open into the over-under, and then it lingers here in the middle before it gives up on the buy side and starts to move back down. And in that case, I expect the low to be a modest point of control. So we expect it back at 110. 4110 is the number we're expecting on the downside. That'll be scenario 2, but it still leaves us with a higher low, higher high. I'm looking for a higher low, higher high. Remember, so far we've got the monthly one-time framing down, the weekly one-time framing down, the daily one-time framing down. I'm looking for that to break today. Okay, so there is some pressure from the buy side, given that we had an excess low yesterday and we had a pretty strong rally into the close. This is a potential short-term or intermediate-term reversal point. And so scenario 1 is definitely one that pushes for balance back at 42.14. Hopefully you learned something today. Hopefully you gain something every day that you're here. Good luck, and I'll catch you tomorrow. Watch your risk. Be a trader, not a gambler. Take care.